All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we have a lot to talk about in this video. I only make one video a week now, guys, so what I want to do is I want to go through everything in this video. I want to talk to you guys exactly how much I have in my investing account. I have this blurred, but I will show you guys in a second because I added more money into YMAX and I added more money into my SPX shares. So I want to go exactly what I'm doing with this position and how it's performing so far. What I also want to do is I want to show you guys some new stocks or ETFs that I might be looking to get into and the reasons why I might be looking to get into them. They're both high yielding, with them being IWMY and FEPI, which is from Rex Shares and Defiance. But as well in this video, I want to show you guys how I took $3,000 Canadian because my portfolio is currently sitting at about $4,500 and I only converted $3,000 Canadian into American dollars for only $5 with Questrade. So in this video, I want to get through to you with all of that. What I do want to say is we're up to 5,142 subscribers, way over that 5,000 subscriber marker. I want to say thank you to everyone who subscribed and for sticking around on our channel, because now we're making about one video a week, but this is a jam-packed video meant for you. 10-minute video, let's give you some value. So we're talking about YMAX and SPXS. So my strategy for this is YMAX correlates pretty well with the S&P 500. Now you can see here over the past 6 months, my kind of main goal with YMAX is just to see how it performs against the S&P. I don't care if the S&P goes up or down. I just want it to perform at the same level as the S&P. And so far, so good. When we go to the 5-day calendar here, you can see that they correlate pretty well, with the S&P 500 kind of trending slightly up to this high on Friday and then trending down, with Yieldmax doing something similar. Yieldmax is YMAX doing something similar. Trended up until Friday, and then it slowly had a trend down. What I want to see for this long term, I understand that the charts aren't going to be exactly the same because YMAX does pay dividends. So you'll see these massive drops. And you'll notice here that with these massive drops, the share price will drop too. Long term, I do think the S&P 500 is going to be bullish, as it has been for the majority of its history, where it continues to trend up. And that's really the reason why I'm also very bullish on YMAX, is because it holds 19 different ETFs, like the underlying stocks of these Yieldmax ETFs are Tesla, Apple, AMZ, Google. You have PayPal. You have ones like Ybit, which is, Bitcoin. So it's fairly diversified across different sectors. SQY, still financial. We have Exxon, which is gas, Coiny, crypto, Disney, entertainment, and you have tech. So YMAX is a decently diversified cover call strategy ETF, holding about 19 or 20 different cover calls under them. They obviously pay a great dividend and they look to kind of track like the S&P 500. But with the S&P 500 trending up long term, I do think that's going to have a positive effect. We need an uptrending stock for a Yieldmax strategy to work. Of course, we had Tesla, and I still have Tesla in my account. And although it's performing not too bad right now, it's kind of recouping a bit. It has been a poor performer, down 37%. Obviously, that doesn't include the dividends I've received back. I've received quite a bit in dividends, but it's been down about 37%, and we need an uptrending strategy for a Yieldmax strategy to work. And what is better than a diversified index, which is the S&P 500, that generally trends up over time? That is kind of my thinking around that. And you'll notice how when the S&P 500 does go down, like it did here back in April, about April 9th to 19th, this move from about $5,200 down to about $4,900 was about 5%. I'm going to do that for you right now. 52 divided by 0.96. So you could see here that it was about 5% or so. Well, Yieldmax, when Yieldmax was at the same time, the Yieldmax YMAX ETF, on April 11th, it was at 2168. So we're going to enter that right here, 21.68. And I'm doing this to show you the downside of Yieldmax. It went down to 1938. So we'll divide 19.38. And you'll notice how the other one was about 5%. This is about 11-12%. So what are we going to do? YMAX could potentially go down double what the S&P 500 does. So we need something to hedge it on the downside. Well, that is why I'm buying SPXS, which is a 3 times bear on the S&P 500. Look, I'm not a bear on the S&P 500. I think long term it's going to trend up, and I think it's going to continue to trend up as people look to invest more and more money into the markets. But you cannot neglect the periods of downsides in the history. We had 2021, we had 2008 as well, and we need to be prepared for our Yieldmax strategy to be hit hard by these downsides. And so I've invested a portion of my money, about 20%, a 20-80 split between SPXS and YMAX, and it looks to kind of recoup on the downsides of the S&P. If Yieldmax is going to go down by 2 times what the S&P does, I need something that will go and retract that more, which is going to go 3 times in the opposite direction of the S&P. And so far, it's been working out great. My average price is actually sitting at, we could see here, for SPX, it's sitting at $7.85 right here. And currently we're at $7.85, and that's due to the fact that they actually paid a dividend too. So I'll be earning some income on that, about 8%. So that is my strategy right now. To show you kind of my positions here, see I have 82 shares, which roughly equates to about $600-700 right there for SPXS, and I have about $2,600 invested into YMAX. That was my current addition. See my orders here. And what I did, another strategy which I created, or didn't really create, but I seen online, was to buy, I'm in Canada, so I bought DLR.TO with my Canadian dollars. And what I did was I got on chat with someone at Questrade on text, and I said, hey, could you just journey these over to DLR.U.TO, which is the American kind of exchange rate for DLR.TO. It's basically DLR.TO tracks the Canadian dollar, DLR.UTO tracks the American dollar. And so I journeyed them into DLR.U.TO and was able to convert 3,000 Canadian dollars to US dollars with only paying $5 in commission fees, because that's what Questrade, it's kind of like what Questrade does. If you sell an ETF, they will charge you about a $5 commission fee, but they don't charge you anything for buying, which is fantastic. And I do have a referral code in the description of this video. All you got to do, take this referral code, copy it from the description, and use it for yourself, and you'll receive $50, and I will receive $50. So if you want to see this investing account grow and you want to grow your own, definitely click that referral code, and we'll be helping us both out. But one thing to think about with this is I'm actually very happy with Questrade. I love the fact that they don't charge commissions on the buy, because I'm going to be investing my dividends and I'm not going to be paying any commissions. The fullness of my dividends is going to go right back into this Questrade account. And that is exactly why I wanted to go with Questrade, because I can get dividends from YMAX. I don't have to pay any fees like I was paying back in CIBC, as you probably heard me mention many times on this channel. And so that is going to help me to compound dividends a lot faster. The only time when I'm going to pay a commission is when I sell. So that is okay with me, because when I sell, I'm going to be selling a lot more than when I'm buying. Like, I'm only going to sell once, I'm going to be buying a ton. So if you're interested, click that referral code in the description and get your $50 right there. But this was the strategy. I'm going to pretty much continue to invest in YMAX. Another thing, YMAX goes off the S&P 500, right? While Rex shares, FANG is kind of about the same thing, and invests in 15 of the biggest tech stocks in the S&P 500, which is obviously subject to change. But that's another one that I'm looking at as well, because it pays roughly a 25% dividend. And it's another cover call strategy which has been performing fairly well. It's fairly stable while returning a 25% dividend. Another one, IWMY. It's been in a downtrend, but it's because it's paying huge dividends. The last dividend being 60%, where prior to this, it's actually paying much more in dividends, closer to like 80 or 90% in dividends in a year, which is insane. But this would really be a huge income play, but only an income play, because capital-wise, it's not really performing that great. But I'd have to find something like SPXS for those indexes like the Russell, so that I can outweigh the downsides of IWMY. So if you guys enjoyed this video, please do remember to subscribe. We're up to 5,142 subscribers. A little video to explain the strategy on YMAX, how it's going so far, and how I'm using SPXS to hedge myself to the downside, what I might be looking to add to my portfolio, and how exactly my portfolio is doing so far.